Here we go. Okay, so thank you very much for your time. What I've done on the website is I've logged in, I've gone to support, and I just want to review where the training videos are. So if we scroll down, we see CorpWorks training. Click on the accordion, open up the different training videos, and then this will walk you through all of the main features. There is one thing that I want to point out, and it's simply that we built VisionWorks, CorpWorks, and TrustWorks off of what I'm going to call the same chassis, meaning the left-hand side has the navigation pane and so on. So I would recommend that if there are specific entries and how to quantify specific things like corporate gross sales or something, just remember that financial plans has the, entry basics and types of plans has the section on the main types of entries, and it's 14 minutes long, but it goes through how to use the draggable graphs, et cetera, to create entries. So just if you are struggling with that at all, just make sure you go back and have a look at that particular video under VisionWorks training. So let's go to CorpWorks. And what I'm going to do is walk through some of the key features. And if you do have any questions as we go, please ask. So in this file, I have ABC, which is a holdco. It has 100 shares outstanding owned by Bill Smith. DEF is the opco, 200 shares outstanding owned by ABC. A couple of things, if you look at the general tab, you'll notice the type holding company or operating company. This isn't necessary for the SBD and the calculation of taxes and so on. All of that is actually based on active business income as compared to passive income and so on. The reason for this drop down is simply that when we import into VisionWorks, we need to know whether a corporation shares qualify for the lifetime capital gains exemption. Holding companies don't, operating companies, active business income does. So that's the only reason for that. We go to the capitalization tab. I'm sure you know by now that you can put in any capital structure you want. So common, special, preferred shares. And as far as class is concerned, plain common or special or preferred, A through Z and so on. If you're doing preferred shares, remember that if these shares were subsequent to an estate freeze, a previous estate freeze, you need to click the previously issued due to estate freeze checkbox, and then you need to reopen and click the estate freeze checkbox. It's a two-step process. It has to be done that way just for programming purposes. But what this does then is it creates the preferred shares as a liability of the corporation, because at some point in the future, they'll need to be redeemed. The other thing that I just want to point out when we go to shareholders, key employees, is that it's absolutely essential that you import from VisionWorks or TrustWorks. You can't just go in, click enter new, put in somebody's name, and then have them linked back, let's say, to a VisionWorks plan. You need to do the import. And the reason is that a name, a shareholder's name, is just a text string. When we do the import from VisionWorks, what we're actually doing is not only importing the name, the text string, but behind that name is a bit of code. And it's actually the code that is enabling us to link the people in CorpWorks to the people in VisionWorks and so on. So what that means is, if you're dealing with a corporation, if the shareholders are in VisionWorks, the first thing you need to do is set up the VisionWorks plan to create those shareholders, then be able to import them into CorpWorks. If those shareholders are in TrustWorks, personal family trust, for example, then what you'll need to do, you can set up the CorpWorks file, but not complete the shareholders' key employees. You would have to then set up the trust in TrustWorks and then come back to the shareholders' key employees tab in order to be able to import those people or the trust from TrustWorks. The other thing is, of course, when you're dealing with an opco, just keep in mind that when we go down here, this is where we're going to put in the key employees. One other thing that I skipped over, I apologize, if we go back to capitalization, I just want to touch on this debt feature. So when you enter debt, and oftentimes debt for a corporation is going to last many years into the future. So I'm going to make this 100 years. And what I want to do is, if it's debt that will be issued in the future, then what I've got to do is I've got to put in a maturity date that is more than 100 years from now. So what happens is, if we put in 2023, then we take 2023, backdate it by 100 years, and that says the debt will be issued June 18th. Sorry, that should be 21-23. I apologize. 21-23. Then that's the backdate, and that says the debt will be issued on June 18th of 2023. So it has yet to be issued in the future. If it's debt that was issued in the past, then we would put in something like 2100. It's not really all that relevant, but 2100 minus 100 would be the year 2000. So we're just saying sometime before the current year. So if you've got debt that essentially will never be paid, you want to put it, many, many years into the future. But what you need to do for debt in the future is add a maturity date past the current date plus 100 years. And then that gives you the date when it'll be issued. Hope that's not too confusing. If anybody has a question about that, please speak up.
So that would apply to shareholder loans?
This is a shareholder loan. That's exactly what it is. And then what happens is, when you go to VisionWorks and you do the import-export and import from CorpWorks, then what happens is you'll see that the loan will be here, and then you'll say which of the people in VisionWorks was the person that actually made the loan. So that's the setting up of the file. Let's move on to entries. Entries, again, having built everything off the same chassis, the entries in VisionWorks, CorpWorks, and TrustWorks are essentially identical. The one thing I do want to point out are a few of the entries under taxes. Balance sheet details is often neglected. Well, the issue is that if we take after-tax earnings of a corporation, let's just say $100, if dividends in the past of $50 have been paid, that means that $50 that could have been paid ended up being retained earnings, which then grow over time. So those retained earnings are therefore available to be paid in the future. So it's not uncommon, of course, to see a company where there's a fair amount of cash on hand, and if we want to be able to pay it out, then we need to include those retained earnings to say, the annual available is from the current operation of the business, but the retained earnings is from profits in the past that were not paid. So they're available to be paid in the future. So if we've got a fair amount of cash, we need to include retained earnings to be able to pay that out. What's also true, of course, is that retained earnings in the cash in the till need not at all be the same. But if you can't get a hold of retained earnings, then roughly use the value of any current portfolio and sort of call that the retained earnings. The other thing that I just want to point out is if we go down to deductions, reductions, the small business deduction tells you exactly where to find the number you need to enter from the previous year's tax return. And then if you go to the refundable dividend tax on hand, the ERDTOH and ERDTOH amounts that are being carried forward, if you click help, remember that the first help topic that comes up is always a general overview. But if you click see also, it will tell you exactly where to go on the previous year's tax return to find the numbers that you need to do to enter in here. And all of this, of course, has become much more complex over the last couple of years with the changes that were made. And so if we want to handle the carry forward and dividend refunds and so on correctly, then you need those numbers. RDTOH is a thing of the past, but sometimes you won't get the most recent tax return. So that's in there, and there's some math that kind of converts it. So the tax entries are quite important. The other thing that I wanted to point out was when it comes to the income of a company, you need not get into great detail if you don't want to. Pretty much what we need is we need the tax return, and then what's filed with the tax return every year, of course, are the financial statements, which is the balance sheet and the income statement. So if you look at a corporation's income statement, the top line will always be gross sales, and then there will be expenses. And those expenses you eyeball and say some of them are fixed, telephone and utilities, office rent, have to pay those to be in business. Some of them are variable, advertising and promotion, for example. So you just eyeball the expenses, total up all the fixed expenses, put them in, total up all the variables, but the variables are expressed as a percent of gross sales. And that way, if you change the sales in an absolute sense in the future, semi-retirement or whatever it might be, then the variable expenses will adjust accordingly. If you want to, you can get into more detail by clicking the details button. And what we've included are the main entries that cover most businesses. You'll see fields that say other, so you could type on that or click on that, enter something that's different, and then put that in if you wish. But you can go to the details and be a little more explicit if you want to. You can see variable expenses. Travel would be a good example of that. But I think basically, if you just work at a high level, that's going to be more than sufficient, and you can avoid having to get into a lot of detail about things. One other thing that I just want to point out, of course, we look at the equity forecast, we look at the net cash flow forecast, but I also want to make sure you're aware of the capitalization tab. So it will take the corporate value, the number of shares outstanding, and calculate the value per common share. If we have preferred shares, we'll also see those listed. And under tactics, let's go down there now. One of the things that, of course, you can do if preferred shares are being issued as part of an estate freeze is that in the future, you can redeem those shares, and sometimes you'll be redeeming those shares over time, not by any means all at once. So, if 100 preferred shares are being issued, maybe you're redeeming 10 shares per year for the next 10 years. So if you are doing something like that and you go to the capitalization tab, you'll see the 100 preferred shares. And then in the year you start that redemption, you'll then see 90, 80, 70, and so on. So you'll be able to clearly see that those redemptions that you've entered are reducing the preferred shares outstanding. The one other thing while we're here, just keep in mind the valuation methods. So we default to equity, but you can put in a value per share, or as an example, you can put in a capitalization of earnings. That would be something that an advisor would use when trying to put a value on a book, for instance. So let's go down to dividends, because that's really what it ultimately is all about. As you know, what we're doing in the background is we're tracking the CDA account, if anything. I don't have any portfolio turnover going on here. The eligible dividends, you need to enter the starting GRIP pool. You also need to enter, by the way, the value of the CDA account. But if you enter the starting GRIP pool, then after that, if there is a change, then VisionWorks will calculate what the GRIP pool is in the future, of course, subject to any dividends being paid. And then in this case, because we're dealing with the operating company, needless to say, we're looking at the annual available and so on. So I want to just talk about the ways that you can make payments. You can go in, just decide to pay from one of the pots, however you wish. Or you can go to auto withdrawals, and you can do auto withdrawals in a couple of ways. First of all, you've got to talk about the type of dividend you want to pay. So you can go in and, for example, say, I want to pay $100,000. Well, let's make this $50,000. I want to pay $50,000 a year every year. Click that, repeat it to the end of the table. Or as an example, you could take that amount and index it. And in this case, I'm saying if there are eligible dividends, I want to pay from that pot first. And if that pot is used up, then I want to pay from the ordinary dividends pot. Now, we have the eligible dividends as 175,000. So if we go in and have a look, you can see that we're able to pay from that over the next few years. But then starting in 2025, or let's look at 2024, we can only pay part of the dividend from that pot, and in 2025, none. So now if we have a look at the ordinary dividends, we'll see that in 2024, the balance is being paid from the ordinary dividend pot. And then in 2025, all of it is ordinary dividends down to, as you can see, 2023. So auto withdrawals, you can put in a specific amount that you want to take out every year. And then depending on what you select under the type list and the order, this is obviously the tax preferred order, then VisionWorks will go and pay from those two pots if money's available, and then switch to the other pot and so on. The other approach, of course, is to link CorpWorks to a specific VisionWorks file. So I've got this link now. Sorry, don't want to do that. I want to pay these dividends out, actually, to ABC. This is the holdco opco. And you can see we're paying declared. So now if we go over to ABC, we're going to have that income. Yes, we have that income coming in. And now what I need to do, though, is I just need to go to auto withdrawals, and we'll just link that now to the VisionWorks plan. So we need to link this to a specific VisionWorks file. And this is actually the sample demo, and I am linking it to the linked to VWCW solution. Bill is the only shareholder, so I'll get rid of the others. But what's important for you to be able to do this is in order to do the dividend payment link, what you need to do first is you need to go to VisionWorks. Once we've got the CorpWorks file set up, we've imported the shareholders from VisionWorks, But what we need to do now with VisionWorks, before we do auto withdrawals, is we need to import CorpWorks, the CorpWorks file, into VisionWorks. So now we'll go to this, it's the sample file we're using, the base case in CorpWorks. We'll link the people in CorpWorks to the people in VisionWorks. And then of course we have to indicate which shares people own. So I'm making it, of course, the common ABC that Bill owns. And now we've got the link done. So once that processes, we'll see that under other. So if we go to other private company, now we've got Bill owning those shares in those CorpWorks shares. And we need to do this before we can do the auto withdrawals, where we're linking to a specific file. And the reason we need to do this is because CorpWorks is sending a message to the VisionWorks file and solution, and it's saying, you want me to pay you some dividends. How much is your main bank account short each year in order for you to pay your expenses? Tell me year by year. So the only way we can have this complete itself is if we first imported the CorpWorks file into VisionWorks, because when we send that message to VisionWorks, they have to be linked, and then VisionWorks is sending a message back to CorpWorks and this specific solution, and it's saying, this is what I need year by year. And then that's what allows CorpWorks to say, okay, I understand what you need. Let's see what's in the different pots, pay out from the different pots, and pay out enough grossed up to account for the taxes that will be paid on the dividend income that's received in VisionWorks. And of course, the loop going through that happens a few times in order to narrow down how much needs to be paid, given that the taxes can vary from year to year. So it's one thing to import the people from VisionWorks into CorpWorks, but then in order to do auto withdrawals, we have to import the corporation into VisionWorks, and then things are linked up in the loop, and then we can do the complete auto withdrawal. So I just wanted to make sure that you were clear about that. I have had some clients who have not imported CorpWorks into VisionWorks, and then they wonder how come the dividends aren't coming through. So those were the main things that I wanted to cover. I think one last thing, I just want to touch on the tax return, because if you drill into net cash and bring up the taxes, you'll just get the basic 2-page tax return. But what we want to be able to do at sometimes is go in and show that full tax return. So remember, if we select cash sources, we can use the GIFI income statement, the one Schedule 125, and then cash uses, the T2. And then I also want to remind you that if you go to report options, rather than producing a full summary report, if you switch to worksheet, you'll just produce the basic output. So now we can go down, select any year in the future, and say we don't want just the couple of page summary or even the 9-page jacket. We want the jacket plus schedules. So, show us everything that went into building the tax return. And then we can open it up and we see the income statement first. And then that income, and this is for 2024, is then used in the tax return. That's from Schedule 1, which makes some adjustments. But then as we go through the tax return, we can see the area for the refundable dividend tax on hand and the calculations now, which are very extensive, that take us down to the amount available for a dividend refund, which we can now see, and then continuing on, see everything else that's involved in calculating the taxes payable. And just remember that the T2, of course, all the different lines pretty much are based on the different schedules that are available in the as we continue on. So those were the main things that I wanted to cover today, fairly high level, but just more reminders of things. And then what we can do now is dive into specific questions. So if you have any, please. So if there are no other questions, have a good weekend, and thanks for your time today.
Thanks, Michael. Much appreciated.
Okay.
Yep, thanks, Michael.